In this video we are going to talk about the best dividend stocks with growth. So before starting, please like this video and subscribe to our channel for future updates. Nothing seems to be a better approach than buying dividend-focused stocks during periods of market turbulence. This is because, despite the lack of significant price appreciation, dividends represent a substantial source of continuous income for investors in any market. While various dividend companies may bring capital appreciation, focusing on businesses with a history of dividend growth, as opposed to basic dividend-paying companies or those with high yields, leads to a healthy portfolio with a larger potential for capital appreciation. This year, investors have been chasing dividend companies due to ultra-low interest rates and the COVID-19 pandemic. Despite the lack of significant price appreciation, the method provides a key source of regular income for investors in any market. As opposed to simple dividend-paying stocks or those with high yields, focusing on stocks with a history of dividend growth leads to a healthy portfolio with better potential for capital appreciation. Why is it better to invest in dividend growth? Dividend-paying stocks belong to established corporations that are less sensitive to major market movements, and thus operate as a hedge against both economic and political instability, as well as stock market volatility. At the same time, the constant growth in payouts provides downside protection. Furthermore, these firms have excellent fundamentals, making dividend growth a quality and prospective long-term investment. A sustainable company strategy, a lengthy track record of profitability, rising cash flows, adequate liquidity, a robust balance sheet, and some value characteristics are among them. Furthermore, the company's history of excellent dividend growth suggests that additional dividend increases are likely. Although these stocks might not necessarily offer the greatest yields, they have outperformed the larger stock market and any other dividend-paying stock for a longer length of time. As a result, when several other factors are taken into account, buying dividend growth companies appears to be a successful approach. Stocks having a 5-year historical dividend growth rate greater than 0 are chosen for this criteria. Stocks having a 5-year historical sales growth rate greater than 0 are considered to have a strong track record of revenue growth. Stocks having a 5-year historical EPS growth rate greater than 0 are considered to have a strong earnings growth track record. Greater than 0 EPS growth rate in the next 3 to 5 years. This is the rate at which a company's earnings are predicted to grow in the next 3 to 5 years. Companies should be able to keep paying dividends if their earnings improve. Price, cash flow less than M industry. A ratio less than M industry suggests that the stock is undervalued in that industry, and that an investor would have to pay less for the company's improved cash flow. Greater than S&P 50,000 52-week price change, market weight. This indicates that the stock has appreciated more than the S&P 500 over the past year. Top Zacks rank. Stocks with a Zacks rank of number 1, strong buy, or 2, buy, outperform their peers in all market conditions. Stocks with a growth score of A or B, when combined with a Zacks rank number 1 or 2, have the best upside potential, according to our research. With only these few criteria, the universe of equities was reduced from almost 7,700 to only 7. 5 of the 7 stocks that meet the criteria are listed below. Lennar Corporation Len, based in Florida, is a home builder and financial services provider in the United States. For the fiscal year, ending November 2021, the company has experienced a solid earnings estimate adjustment of 60 cents in the last month, with an estimated earnings growth rate of 8.3%. Lennar is a Zacks rank number 1 stock with a B growth score. Washington-based Microsoft Corporation, NASDAQ, MSFT, is one of the world's largest technology companies. In the last 4 quarters, the company has provided an average positive earnings surprise of 12.35%, with an expected earnings growth rate of 16.8% for the fiscal year, ending June 2021. The company has a Zacks rank number 2 and a B growth score. Illinois-based Deere & Company DA, the world's largest agricultural equipment manufacturer, has been producing agricultural gear under the legendary John Deere brand since 1837, with its trademark green and yellow color scheme. The stock has seen a solid earnings estimate revision of $1.95 in the last 30 days for the fiscal year, ending October 2021, and has a 47.1% expected profits growth rate. It now has a Zacks rank of number 1 and a B growth score. Teletech Holdings Inc. is based in Colorado. T-Tech is a customer experience, technology, and services firm that specializes in customer experience design, development, and delivery. This year's earnings growth is expected to be 58.7%, and the company has provided an average positive earnings surprise of 51.79% over the last 4 quarters. The company has a Zacks rank of number 1 and an A growth score. KLA Corporation is based in California. KLAC is a leading provider of process diagnostics and control, PDC, equipment as well as yield management solutions for the manufacturing of semiconductor integrated circuits and chips. It has a projected profits growth rate of 21.5% and has seen a positive earnings estimate revision of 7 cents in the last 30 days for the fiscal year, ending June 2021. KLA Corporation currently has a Zacks rank of number 2 and an A growth score. Sign up now for your 2-week free trial of the Research Wizard and start utilizing this screen in your own trade to receive the rest of the stocks on this list. You can also develop your own techniques and test them before committing to an investment. Based in Las Vegas, Boyd Gambling Corporation, BYD, is a gaming corporation that operates in multiple jurisdictions. Nevada, Illinois, Indiana, Iowa, Kansas, Louisiana, Mississippi, Missouri, Ohio, and Pennsylvania are among the states where it owns and runs gambling entertainment venues. For this year, the company has seen a positive earnings estimate revision of a cent over the last 30 days, with predicted earnings growth of more than 100%. Boyd Gaming is a Zacks rank number 1 stock with an A growth score. California-based Intuit Inc. is a company that specializes in financial software. INTU is a global business and financial software firm that creates and distributes financial, accounting, and tax preparation software as well as related services to small businesses, individuals, and accounting professionals. With an estimated profits growth rate of 19%, the company has had a solid earnings estimate revision of $1 in the last 30 days for this year. The company has a Zacks rank number 1 and AB growth score. Indiana-based Cummins Inc. CMI, is a world leader in the design, manufacture, and distribution of diesel and natural gas engines, as well as powertrain component products. It has a 32.9% anticipated profits growth rate and has experienced a solid earnings estimate revision of 54 cents for this year during the last month. The company has a Zacks rank number 2 and an A growth score. Caterpillar Inc. is based in Illinois. CAT is the world's largest construction and mining equipment company. Over the last 30 days, the company's earnings forecast for this year has been revised upwards by 11 cents, implying a 47.3% predicted profits growth rate. Caterpillar is a Zacks rank number 2 stock with an A growth score. FedEx Corporation FDX, founded in Tennessee, is a global leader in express delivery services. For the fiscal year, ending May 2022, the company is expected to grow earnings at a pace of 12.6%, with a solid earnings estimate revision of 53 cents in the last month. It now has a Zacks rank of number 2 and an A growth score. What are your thoughts on our video? Please let us know in the comments section below. If you enjoyed this video and would like to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.